The bulls have sent this market back to record highs, but they will still be fixated on Washington this morning. That's where Federal Reserve Chief Jerome Powell is set to testify before the House Financial Services Committee in less than an hour. Yahoo Finance will bring you all that testimony as soon as it begins. The futures here have popped higher. You're looking at Dow futures up 95 points. Jerome Powell's testimony has hit the web, and it's looking pretty darn dovish. Let's get right to Jessica Smith, who's in D.C. with the latest on this testimony. Jessica, break it down for us.
Well, Brian, Powell appears to be laying the groundwork for a July cut in his prepared remarks. He tells lawmakers that the U.S. economy has performed reasonably well over the first half of the year and that the labor market remains healthy. But he says uncertainties have emerged in recent months. He says cross currents have reemerged. In his prepared remarks, he referenced the June meeting when the Fed decided to hold rates steady and said that they would act as appropriate to sustain the expansion. He went on to say, since then, based on incoming data and other developments, it appears that uncertainties around trade tensions and concerns about the strength of the global economy continue to weigh on the U.S. economic outlook. Inflation pressures remain muted. Other issues that Powell cites are Brexit, the federal debt ceiling. Both of those issues still remain unresolved. And he says all of these concerns have weighed on business confidence. Powell will tell lawmakers that the baseline outlook for economic growth to remain solid. He says that labor markets will likely stay strong, and he expects inflation to move back up over time. But again, this testimony as a whole looks like it's hinting at that July rate cut.
Yeah, Jess, we know that there's going to be an opportunity for lawmakers to ask questions after his prepared remarks. What do you expect the line of questioning to be there? Will he have to answer questions about his independence from the Trump administration?
I think that will definitely come up in this hearing today. That's gotten so much attention in Washington. The president really going after the Fed. There have been reports that he has thought about firing Jerome Powell or demoting him. So we definitely will get questions about that. Just yesterday, Larry Kudlow said his job was safe, but we'll expect lawmakers, especially the Democratic lawmakers, to really push Powell on this, try to get him to maybe push back against the president. He has said in the past that the Fed is insulated from political pressure, so we expect him to kind of maintain that stance in the hearing today.
All right, Jessica Smith in D.C. for us. Thank you. I want to talk more about this now with Greg Daco, Chief U.S. Economist at Oxford Economics. And always good to see you, Greg. If you take a look at stock futures, it looks like the market's getting exactly what it wants from Powell today.
I think so. I think what we're seeing is essentially the Fed Chair delivering upon market expectations, delivering upon the priced-in expectation for a rate cut in July at the July meeting. Powell has been very clear over the past few weeks that he believes in this mantra that an ounce of prevention is worth a pound of cure. And so what we expect is that the Fed will deliver this immunization shot, in a sense, of 25 basis points at the July meeting and continue to assess global growth development, global trade flow developments, trade uncertainty, inflation, as well as the labor market developments to assess whether the need for a second rate cut later in the year is necessary.
Far be it from me to toss cold water on this rally off of these comments, but the Fed chair sounds more cautious on the state of the U.S. economy. Shouldn't investors care more about that than cutting rates?
I think that's a bit of the dichotomy that we're seeing in the U.S. economy and in U.S. markets today, is that markets have essentially forced the Fed into delivering upon these rate cuts. Not so long ago, there were expectations of 2 rate cuts at the July meeting. Now these expectations have been dialed back a little bit following the very good June payroll report, but there is still that belief that the Fed will deliver about 100 basis points of rate cuts over the next 18 months.
And it looked like he ignored the strong jobs report.
Well, the jobs report is a bit of a paradox, in my opinion, because Powell had noted that there were 4 factors that would lead the Fed to cut rates. Global growth, which was weak, trade uncertainty regarding tariffs, inflation undershooting the 2% mandate, and the May payroll report, which was weak. Now, we had a strong June report, which is encouraging, but overall, we were very surprised to see the Fed chair give so much emphasis to one report in May, which was weak, but we know that there tends to be quite a bit of volatility. So the labor market remains strong, but it is cooling, and in that type of environment, I think it's very important for the Fed to reiterate this message that we have a strong economy, the longest expansion on record, celebrating 10 years in in June. But we are seeing slowing momentum domestically, and that is something to monitor.
Is the timing of the rate cut, though, a little premature? Because you have to admit the Fed doesn't have a lot of ammunition in its toolbox going forward. So is a rate cut now really appropriate? Or is Powell and company really responding to the stock market, which is really not their job?
I don't think they're responding to the stock market as much as people believe so. And that's going to be the key difficulty over the coming weeks for Fed Chair Powell, is going to be to manage their message, that they're not really responding to market expectations, but that they're acting upon future expected growth for the U.S. economy. And I go back to Powell's mantra that an ounce of prevention is worth a pound of cure. In that line, they're going to try to deliver immunization shots. And whether a booster shot is needed in September or perhaps in December will really depend on how data evolves in the coming months.
Is the president winning the war of words here with the Federal Reserve Chair?
Potentially. I think there is an erosion of credibility that's happening over time, and I think that's undeniable. Despite the fact that the Fed remains an independent institution and should remain an independent institution, the ongoing bashing of the Fed and of Chair Powell by the U.S. president is affecting credibility at a time, at a juncture when Fed credibility is really essential to guide monetary policy as well as to guide economic growth going forward. And to go back a little bit to this idea of, is it premature to cut rates today? Well, you have to think that monetary policy acts with a lag. That lag can be long. It can be up to 12 months. So in that type of environment, if you see that growth is slowing, if you expect increased trade uncertainty, if you expect global growth to continue to moderate, then you want to cut now and not have to do as much later on rather than cut more
Get out in front
later
of
on.
it.
Yeah.
It's getting fun. Greg Daco, thanks so much.
Thank you.